Is S&P's ratings review impacting South Africa tomorrow? If we do manage to avoid junk status, there could be better days ahead. Old Mutual Investment Group says the biggest risks are depressed business confidence and business investment, which is contracting. But on the positive side, shocks that hit our economy, like power shortages, labour strikes and the drought, as well as increased interest rates, are in fact fading away. Let's take a listen.
2016 has been a difficult year for the economy, but there is hope that the worst is behind us. Commodity prices seem to be recovering. The rains have improved crops and will likely drive down food inflation. But there are still some lingering risks. The possible tax increases next year will likely put consumers under more pressure. And the greatest external risk is the possibility of the US dollar firming sharply, which could lead to capital flight from developing markets.
We think food inflation and general inflation is going to fall. We think there's a real possibility that interest rates could be lowered sometime the second half of next year. Certainly the rainfall situation appears to be improving. Already we know that maize plantings for next year they are up a lot. So there's some reason to be hopeful. But I think the big thing, if this economy really wants to grow faster, it's important that we get confidence back in the economy. And that means that, we must get over all these political troubles that we had recently. Once we get that, and if we get that, I think confidence can actually revive quite quickly, and the economy can actually fare a lot better. So, I would think that 2016 is a low in the cycle. 2017 will look better, and hopefully, with some support from more stable politics, I think 2018 could look potentially a lot better.
Old Mutual says while the global environment is moving into a rising interest rate cycle, the South African environment of higher interest rates and inflation will mean a more positive environment for interest rate sensitive assets.
This year has been a very tough year for markets with low returns, and cash has been one of the best performing asset classes. Now, if we look forward into 2017, we see that starting to change a little bit. And the reason is we think that interest rates in South Africa have peaked, and that's because inflation is going to come down, so we've got the potential of rate cuts. That's going to be good news for interest rate sensitive assets like South African property and South African bonds, both of which are offering reasonably good value at the moment.
Politics will remain a big theme for markets in the next year, with election coming up in Germany, France and the Netherlands. Gloria Sofakomosi, SABC News, Johannesburg.